Hey, what's up guys, it's Matt, and I'm back with another trading psychology related video, and today's topic will be confidence. So if at any point in time, as always, if you enjoy this video, be sure to drop a like and subscribe to this channel if you haven't yet subscribed. So on one side, you can have someone who is overconfident, or you can have someone else who's lacking confidence. So in this video, we'll start off with overconfidence before we discuss lacking confidence. So one reason why someone might be feeling overconfident as a trader, and this is especially true in the beginning, and it's that trading looks incredibly easy, and that obviously makes sense, right? If you're someone who is just starting off, you haven't had enough experience in the markets, and maybe you watched someone online who made an incredible gain in a short period of time. So maybe they made a 1000% return in just 1 week. Well, to you, this looks like something that can easily be mimicked, and therefore you will feel incredibly overconfident. Now, the second reason why someone might be feeling overconfident as a trader is simply because they're currently on a winning streak. Now, this completely depends on each individual and when this feeling of overconfidence truly kicks in. So for some people, this might only kick in once they've experienced 5 wins in a row. And for other people, this might kick in after only experiencing 1 win. Now, the third reason why someone might be feeling overconfident as a trader is due to buying into hype. So this is where you might have bought an asset that you feel is completely invincible and is only going to go to the moon and is not going to fail whatsoever, or you think you just discovered a holy grail trading system. So maybe you watched a video online or you read a book that discussed a new trading strategy, and so now you feel as though all of the stars have just aligned and you just found what you were missing in your trading strategy. And so this is how you can become a little too overconfident. Now, I'm not saying that confidence is a bad thing. So obviously confidence is good, but being overconfident can have its issues sometimes, especially when it comes to trading. And so for the first point, I decided to include the Dunning-Kruger model. This shows us how when it comes to any new skill, so the skill doesn't only have to be trading. In the beginning, we feel as though this is something that's incredibly easy and we can easily mimic. So in the case of becoming a trader, the barrier to entry is incredibly small, meaning that basically anyone who has even a small deposit of money, so it can be something like $100, they can open up a brand new trading account. And this is where a lot of people look at trading as something that's incredibly easy, because for the most part, it's basically, hey, I'm looking at a chart. If I think that it's going to go up, I'm going to buy. And if I think it's going to go down, I sell. And the truth is that the act of trading is pretty simple if we break it down. All you're essentially doing is going onto your computer or on your phone. You're either clicking buy or sell and you're waiting, and that's it. But those of us that have been in the markets for a long time know that it's not as easy as it seems. And so back to the Dunning-Kruger model, in the beginning, this looks incredibly easy. You have all the confidence in the world. But then once you start trading for a couple of days or a few weeks, you realize that it's not as easy as you think. And so this is why someone might be overconfident in the beginning. So if you are aware of the fact that it's a new skill and trading is not as easy as it truly seems in the beginning, so it takes some time to master, well, then you can avoid this trap, especially when it comes to risking a lot of money. And so this is why it's incredibly important to not jump into risking a ton of money on a live account, because you don't have that experience. And so that's why it's good to start off with a demo account or a paper trading account. And so moving on to the second point, a potential solution for this is to simply learn how to sit on your hands, which is a term that basically means that you need to know your limits as to when you should be patient and hold off over trading. And that's because overconfidence and over trading are very similar to one another. So if you're overconfident, you're likely to overtrade. If you're going to overtrade and you don't have that patience where you're holding off for the next setup that follows your trading plan, at this point, you might look to break the rules. And so if you break the rules, well, now you might start trading some assets that you really shouldn't be trading, or you might increase your risk. And at this point, it's essentially a recipe for disaster. And then this is where you might encounter a big loss. Remember to be patient and to use proper risk management and to know yourself very well, right? So it might not be very obvious as to how you react to a winning streak in the beginning, but if you've been trading for some time, and if you look back at the trades that you've taken before experiencing a big loss after over trading and after being too overconfident, and you find that, oh, okay, after my third win, this is typically where I break the rules, or once I've made maybe 5% for the day or 10% for the week, I end up over trading due to the overconfidence, and then this is where things start to go south. So remember to follow your trading plan and to monitor yourself. And if this means that you need to turn off your computer when you feel as though you're likely going to break your rules because you just experienced a winning streak and now you're too overconfident, that's something that you just might have to do. And for the last point, now some trading strategies are better than other trading strategies, but we need to remember the law of probability. And that's where markets are made up of thousands of different variables every single day that affect them greatly. And so to feel as though there's a trading system that not only applies to every single asset and every single market condition, well, this is something that can be a mistake. But if you understand the law of probability, you will understand that even if you find another strategy that you believe is better than your old one, you shouldn't just jump into a live chart and increase your risk thinking that there's no way that you're going to experience any loss. Ideally, what you should do if you believe that you found a better trading strategy is remember to backtest it. And so at this point, if you do enough backtesting, you know your long-term probable edge. And so at this point, you might hold off on risking way too much because you understand that, okay, this is a good trading strategy, but it only might have an 80% win percentage, and your trading conditions might only be during certain hours of the day. And going back to hype, again, this is something that is probably very prevalent for those who are beginner traders where they feel invincible. So you need to be aware of yourself and your bad habits. So if you have a bad habit of entering trades based on the fear of missing out, so you're trying to participate with the crowd and now you're overconfident because of everything that you've read online that whatever you're buying into is guaranteed to make you a winner. Again, we need to remember that there's no such thing as a perfect trading strategy or something that is 100% guaranteed to succeed. Let's discuss some reasons as to why someone as a trader might be lacking confidence. And so the first reason is that you might have just experienced a losing streak. So maybe you have 3 losses in a row, or perhaps 6 losses in a row, or maybe you just experienced this losing streak after having blown a previous trading account. So there's many different ways at which you can experience one. And for point number 2, as to why you might be lacking confidence as a trader, this could be due to the fact that you truly don't believe in your trading strategy. And so there's a difference between truly believing in something and only partially believing in something. And so points 1 and 2 are actually very similar because you might experience point 1 and 2 at the same time. So you might not truly believe in your trading strategy because perhaps your trading strategy has led to a losing streak in the past. And therefore, if you experience another losing streak, you will continue believing in your trading strategy and believing in yourself less and less. And so for the third point about why you might be lacking confidence as a trader, and I personally believe that this is a big one, and that's having personal issues in your life or the feelings that you truly have about yourself. And this totally depends on each individual, but this is a big one because the way that we feel about ourselves, especially outside of trading, can easily translate over to how we feel when we're in front of a computer screen or in front of a chart in placing any trades. And also when you're having a personal issue in your life, this can also translate over to how you feel as a trader. And so now let's discuss some potential solutions as to why you might be lacking confidence and how you can fix this. So the first reason, as we've discussed, is that you just experienced a losing streak. So this sort of ties into the last point for feeling overconfident, and that's not understanding the law of probability. And so if you just experienced a losing streak, you need to understand that losing streaks eventually will occur for everyone. Again, this depends on what your trading plan is. So maybe if you're someone who is a more aggressive trader, and you might sacrifice having a high win percentage for having a greater risk to reward ratio, you'll understand that you'll likely experience more losing streaks. And so we need to remember that just because we experienced a losing streak, that doesn't mean that it's the end of the world. And again, if we're following our long-term backtested strategy, and so if you backtest your plan and you know that you have a certain long-term probable edge, where my probable edge might be where I have a 70% win percentage, which I got through backtesting hundreds and hundreds of trades, well, just because I experienced a losing streak, that doesn't mean that the next 10 trades or the next 50 trades are also going to be losses. And so typically what might happen is you might experience a losing streak, you might lack the confidence in yourself, and so then when you have another probable opportunity that presents itself where you know that you should take the trade, you ignore it and you don't take it because you're afraid of taking another loss. But that setup that you avoided taking might be the next setup that gives you your next win. And maybe the next 5 setups that you avoid could be the next 5 wins in a row. And so now for the second point, where you don't truly believe in your trading strategy, a potential solution for this, which I've already discussed previously, is backtesting your trading plan and making sure that you backtest enough data. So if you only backtest the past 5 days or the past 10 days of your trading plan, it's not enough data to provide you with an accurate representation of what your long-term winning percentage might be and how often you're likely going to encounter some type of losing streak or some type of winning streak. Because at this point, you're essentially investing your money into something that you truly don't understand, where if you don't trust your trading strategy because you haven't backtested this strategy enough, and you experience a losing streak, well, this is where your belief in your trading strategy will go down and you will start to doubt yourself. You will lack the confidence to continue following your trading plan. But if you do enough backtesting and you understand the law of probability and you have proper risk management, so you don't over leverage or you don't risk money that you can't afford to lose, well, then this is where your confidence will start to go up again. And now for the last point, if you feel as though you're lacking confidence due to having certain personal issues in your life, or you have a low self-esteem, a potential solution for this is to first focus on addressing the personal issues in your life and figuring out as to why you feel a certain way about yourself before trying to force certain trades in the market. And this is because a lot of people might look to trade simply as a distraction from their life. So if you are someone who is lacking confidence and you don't feel great about yourself in the real world because maybe you had a job interview and you interviewed for that job and you got rejected, or you ended a long-term relationship, or maybe you lost someone that's close to you, or maybe you're in debt. Well, understand that if you're looking to trade to feel better about yourself and you're ignoring the personal issues in your life, so maybe you're dealing with a lot of anxiety or depression or anger, well, a lot of this will translate over to how you react when you're in front of a chart. So if you feel bad about yourself because of something that happened in your personal life and you feel like your confidence is pretty low, well, then you shouldn't force trading in order to feel better about yourself, because obviously trading with the wrong psychological mindset will lead you down a path of where you will start making a lot of mistakes due to the feelings of frustration or the lack of confidence, and this might lead towards losing a lot of money, and then you will start to feel worse about yourself. This is maybe where something like meditating or exercising or perhaps discussing your issues over with someone as to why you're feeling the way that you are and how you can slowly improve your levels of confidence. And if you do have a personal issue that prevents you from following your trading plan or trading responsibly, and you're in it just to get rid of a lot of debt, which actually leads into having a lot of pressure, well, then this is not something that you should do. And it's okay to take a break from trading. It's okay to not trade for a couple of months or perhaps even a few years, and to resolve your personal issues and feelings about yourselves before you decide to give trading another crack. So if you've made it this far and you enjoyed the video, be sure again to drop a like and also check out my trading community. The links are down in the description of this video to the Discord app and the Telegram app. There's hundreds of people discussing different setups for the crypto, the forex, and the stock market. And as always, thanks for watching. I'll see you guys in the next video.